Okay, so let's move on. So now let's look at our current liabilities and deduct from the current assets to get the working capital. So professors, as we read from the format, these are the current liabilities. Creditors, bank overdraft, expenses accrued, income prepaid. Let's check the question for the ones we have here. And going through, in fact, your liabilities have credit balances. So at least this should be your focus. Right? When you are looking for your assets, you look at the debit side. For your liabilities, you come here. Obviously, sales is not a liability. Capital is not. Loan is a liability, but not a current liability. It's a long term. Creditors, definitely number one on the list. Creditors. So that's how much? 950. If you check, this is returns discount. These are not liabilities, right? Okay. So the only liability is creditors. Now, professors, listen carefully. If you have two or more current liabilities, then you would have added them here at the first column. So let's assume we had creditors 950, then would have put it here and maybe bank overdraft. Okay, you add them here and bring the totals under the current asset. But in this question, it's just only the creditors. So at that point, you can put it straight under the current asset and subtract to get your working capital. And I hope that point is well made. So we need to subtract the 950 from the 7,250 to get the working capital. How much are we going to get for that? Okay, Prof. Nadum, well noted. So how much are we getting if you have punched the calculator? 7,000. Yeah, Austin.
Sir, please, 6,300.
Okay, so we have 6,300. So that's the working capital. You add it to the fixed asset here. Okay, that should give us, I think, 23,300. And that is your net total assets. And of course, you need to underline that figure twice because that's the final figure for the net assets section. Okay. We now move on to the finance by. So right after your net total assets, you go to financed by. Okay, and I indicated the first thing is your capital for the sole trader capital. So you go to your balance, your trial balance, and get your capital figure. Capital has a credit balance, so you look at the credit side, and there you have it, your capital here. Put it at the last column, 11,130. Now let me show you the format again. When you bring the capital under the finance by column, you do few adjustments, which includes adding the net profit and lessen what? Drawings. Adding the net profit and lessen drawings. And then you add on your long-term liability. Okay, so let's look at adding the net profits. I think we were able to estimate the net profit the last time. So I don't know if any of you have the figures for the net profit from this question as we saw it the last time. Or none of you kept that data. Okay, no worries. I have it here as your teacher, and so I'm going to show it to us. So our net profit was 3,170, right? That was what we had when we prepared the trading profit and loss account. So that is where it becomes necessary for you to prepare those two before you look at your balance sheet, right? Okay. So you also less the drawings, and you can all agree with me that we have drawings in this question, right here in the trial balance, drawings of 1,000. Okay. So you sum this up, subtract the drawings, right? And what you get is the net capital or the closing capital. So please, someone should punch the calculator for me. 11,130 plus 1,000, oh sorry, 3,170 minus 1,000. If you have the figure, you can give it to us. Okay, please go ahead.
It's 13,300.
So 13,300. Great. That's your net capital or your closing capital. Then you add on the long-term liability. Okay. There are some questions they have no long-term liability. That's fine. But in this question, you have it, and that's the loan, right? The bank loan or the loan from bank. So loan from bank. And that is how much? 10,000 you add on. And let's see. So we now have 13,300 plus 10,000. That should give us 23,300. And that is your capital employed. Again, you need to underline that figure. So like I indicated, your capital employed should always be equal to your net total assets. Okay, if not, it means there is an issue you have to go back and rectify. So this is your balance sheet, and this is how you prepare your balance sheet. I'm just going to go over again. You start with your fixed assets, followed by your current assets. Okay, less your current liabilities to get your working capital, add on to the total fixed assets. Okay, the total fixed assets. Then that gives you the net total assets. After that, you look at financed by. Okay, so these assets were financed by investment from the owner, which is capital, but we need to adjust the net profit and the drawings. Now, if you had a loss, then you know loss is a negative figure, so it's going to affect the capital negative, or you subtract it, right? Less your drawings, and then you add on any loan or long-term liability to get your your capital employed. And your capital employed should be equal to your net total assets, as you clearly see it here, 23,300. Okay. Question time. Any questions? If there are no questions, I think we'll go to the second. Okay, Austin.
Sir, please, if there are no long-term liabilities, will you just go straight forward with your capital employed?
Yes, so if there were no long-term liabilities like this, then the final figure, that's the net capital, would have been the capital employed. Okay. Okay, thank you. Any other question? Yes, Tina, please go ahead.
Sir, please, you said something about the lots. Please, can you go over it again?
Okay, so I'm saying that if you solve the question where you didn't get a net profit, but you had a net loss, Then under the finance by, you were going to add your net loss, or better still, you say less, because you are going to subtract. A loss is a negative figure, so it will subtract or will be deducted from the capital. So less net loss, and then you put the figure here, right? So if it's a loss, you subtract, but if it's a profit, you add. I hope that is clear.
Yes, please.
Thank you, Prof. Tina. Okay, I think there are no other questions. So we look at the second illustration. Again, the requirement is to prepare the balance sheet. I think I'll do this with you, and then I'll give you one to try for me. But maybe this time you prepare from the trading profit and loss account and the balance sheet. And I want to believe that shouldn't be a headache to my professors at all. So balance sheet as at, let's check the date, 31st December 2005. Please, as funny as it may sound, some students will write this heading as balance sheet for the year ended. And then they will write trading account assets. Please, I beg you, don't mess them up. Okay, so this time the currency is Ghana cedi. So put our currency Ghana cedi, Ghana cedi, Ghana cedi. Okay. So we begin with the fixed assets. The fixed assets. Okay. So professors, let's quickly identify the fixed assets. Assets have the debit balance, right? So you come to this column and fish out your fixed asset. Professors, what fixed asset do you see? Think of so far everybody has spoken except Prof. Ajimai. Prof. Mike, I'm still on you. I don't know if you are having microphone challenges today, but if you can get us one of our fixed assets from this question, I will highly appreciate. Okay, whoever is ready can put up the hand and then tell us. The clock is ticking, so let's be snappy about our responses.
Steph, you almost mentioned the fixed assets in the particulars.
Portia, take it again. Is that one of the fixed asset is?
Okay, Steph, please, building.
Okay, so Portia has given us building. Okay, thank you, Posh. Any other fixed assets apart from the building? Okay, go ahead.
Furniture, sir.
Furniture, okay. Augustine?
And say, please, plant and machinery.
Plant and machine. So it's always important that you start from top, right? And then you pick them one by one. So if you started from here, the first one you see is plant and machinery. Plant and machinery, right? Well, again, you can show the cost, the accumulated depreciation, and then the net book value. So the plant and machinery is 100,000. The next one, opening stock, no. Purchase is no. Building. So building, that's 170,000. Move on. Carrying was no. Out was no. Wages, debtors, salary, furniture. So if you do it that way, you will not skip any of the assets. So please take your time when you are doing that. So the furniture is 36,000. You move on. Trade expense, discount, advertisement. Bad debt drawings, insurance, bank balance, no. So these are the fixed assets that we have. There are no depreciation. So eventually this cost will be the net book values. Okay. You see, accounting is not difficult to total fixed assets. So my professors who are not so familiar with their fixed assets, you may have to revisit your element of accounting. Okay, look at your assets and liabilities. From the fixed asset, we go to the current assets. And now we are familiar from stock, which is the closing stock, debtors, prepaid expense, accrued income, bank and cash. So our closing stock is here 90,000. So let's pick it. Put it at the middle column, 90,000. The next is your debtors. Check for the debtors figure. Professor, see if you are okay. So you see it here. Sundry debtors, right? Sundry means total, right? So sundry or all debtors, total debtors. That is how much? 150,000. Now, you see, sometimes it's funny. A student was solving such a question. There was sundry debtors, and he was confused. At least your teacher said that your current assets are stock debtors. So if for nothing, you take the sundry debtors and argue your case that you did it because of the debtors in it. The person sat down as if he has not heard. I hope and pray that professors will not do such a thing. At least you see debtors there. So even if you are confused, let the debtors guide you that this is the current asset I'm looking for. Then prepaid expenses and accrued income. No. Now those two things, let me indicate to you. They normally come in the additional information for adjustment. Right. So questions that does not have, or questions that do not have additional information, you don't see those prepaid expenses and all those things there. So we don't have any of them here. There's no prepaid expense. In fact, you won't see anything like that here. I'm not seeing any prepaid or accrued anything here, right? So we go to our bank balance and our cash balance. So let's check if we have bank and cash. So you have a bank balance here, 20,000. So bank. What of the cash? No, there's no cash. Fine. If there's no cash, that's fine for us. So we get our total current assets. Total current assets. And we go and gather the current liabilities. So we less current liabilities. We know them now. Your creditors, your bank overdraft, expenses accrued, and income prepaid. So where is it? We look at the credit side here, and definitely you see this sundry creditors. Sundry creditors. That is how much 40,000. Apart from that, do we see any other current liability like overdraft or anything? No. So it's just the creditors again. So we put it here 40,000 and subtract from the current asset to get the working capital. Which will be, I think, 220,000. Okay. You now add this working capital to the total fixed assets, and that should give you your net total. Okay, so we have 526,000 as our net total assets. We then carry on with the financed by. obviously capital, right? Capital begins the show. So how much capital do we have, professors? I think we can all see it here, 171,500. Then again, we add the net profit or net loss. I think in this question too, we had a net profit, right? I think this is what you did for the assignment, if my memory serves me. Yes, Austin.
So the net profit was 264,500.
264,500. Okay. Then we less the drawings. There's drawings in this question, 10,000. So we do that adjustment to get the net capital or the closing capital. So that is this plus this plus, sorry, minus rather, minus this. And another mistake students do, they have written less, but when they are punching the calculator, they add it. So be careful when you write less, you know you are subtracting. So that's the net capital. We check for long-term liability, which is a loan. Yes, we have a bank loan. So long-term liability. That is the bank loan, which is how much? 100,000. We add on, and that will get us to 526,000 again as the capital employed. And right on point is the same as the net total assets. Very, very important. So, dear professors, this is your balance sheet. Okay, very simple thing to do without any stress. Questions for me? Please. So the question, let's hear you, Josephine, and then I'll come to Augustine. Question.
Sir, please, we did a balance sheet at school, but then the madam told us that none of the amounts is supposed to be the same. So I'm confused. I don't know if it's the same thing or it's a different balance sheet.
He said none of the amounts should be the same.
Yes, please.
If she gave specific reference to the none of the amount, which amount was she referring to?
Yeah, please, she gave us the horizontal format and the vertical format. And then she said with the horizontal format, then there will be equal amounts like at the end. But then the vertical format, there will be no like equal amounts anywhere.
Well, I'm sure probably you have missed her point a little, but this is what I know. Regardless of whatever format you use, the principle is that if you are using this model, your net total assets should be equal to your capital employed. Now, some other models, what they do is they only add the fixed assets, okay, to the current assets and get their total asset. And then they put the liabilities and the capital at another end. If you do that, again, your net figures or your total sum should be the same, right? But what I know is that if I use this method, vertical method, and another student uses the horizontal method, we might not get the same balancing figures. I don't know if I'm making sense. Because if somebody is supposed to use the horizontal method, even that one, it depends. If I use the horizontal method, but I went in for the net asset model, then the figure should be the same as I've presented here. Okay. But what happens is that, let me show it here. Some people do it this way. Let me take a pen and some people go the horizontal method. That's the T account type, but the balance sheet is not an account. Know that the balance sheet is not an account. It doesn't have a debit side or a credit side. No. So some people do this and then they put their fixed assets, okay, and then they put their current assets here, right? And then on this side, they put the capital, add the net profit, less drawings, whatever, add the long-term liability and bring the current liability to here, okay? If that happens, let's even use the figures we have here. If we just added the fixed asset to the current asset, look at the figure we're going to get. Okay, let me close this. So we're going to get the fixed asset is 306,000, right? While the current asset is 260,000. Okay. So if we added those two figures together, let me do my formula again. I have just edited it. Good. So if we added these two figures, we would have gotten, I think, 566,000, right? Your fixed asset to your current asset. Okay. Then on the other side, we put the current liability, which is 40,000, add on the capital, less drawings. Okay. So that will be this figure. Let me do it. 40,000. Okay. Current liability plus the long-term liability, which is the loan, plus the capital. Okay. Plus the net profit minus the drawings. What are we getting? You are getting the same balancing figures, but you see they are different from this model we use, right? But the balancing figures are the same. Why is it different from this model? Because in this model, we subtracted the current liabilities from the current asset. But in this model, we didn't do that subtraction. We put the fixed asset and current asset together, and we put the remaining element together. And this is the figure we got. But regardless of whatever model method you use, there should be balancing figures. That's why the name is balance sheet. Your sheet has to balance. Remember the double entry principle. What you do at the debit side, there should be a corresponding credit or otherwise. So always you should balance, like your trial balance should always balance. Okay, so maybe she was referring to somebody using this model or method and another person using another model or method. Okay, I've seen a certain presentation where they bring the fixed asset and current asset and they subtract, listen, they subtract both the current liability and long-term liability. And they only put the capital and the net profit thing one side. Yet still, the figures should balance. So, Prof. Josephine, that's my question, my answer to you. Okay. But if you have the question, Madam, solve with you, I think it will not be bad if we also solve it together. Okay. But having said that, even though it's supposed to balance, under exams conditions, if it doesn't balance, and going back to check your mistake will waste your time, please avoid it. Okay. So that is my little caution to you, because some students waste their time. They want to balance the balance sheets, then they leave other questions, and the time goes against them. Unfortunately, you come and check, and maybe instead of this figure making it 90,000, you wrote 9,000. You waste your time, come through. But if you left it like that, maybe you'd have lost just this mark stock, right? And maybe the totals. So if you, under exams condition, if it doesn't balance, make sure you only come back when you have enough time on your hands, because it can be very frustrating. So Josephine, if you have the question, you can share in the group and then we'll look at it next time. Okay. I think there was another hand up from Augustine Akoli. Augustine. What's your question, Augustine?
Sir, please, it is running at my end, but the network was off and on, so I didn't get any what people were saying.
Sorry, then it means you have to go to the channel to watch the video. Okay, thank you very much, professors. If there are no questions, I think I've solved 2 illustrations with you. That is enough. So I'll give you some more to try, but then we'll be looking at the adjustments to this final account. And that is where the headache is for most students. But I hope and pray that you pay attention to that so that it doesn't become a headache to you. Adjustment to final account. I would employ you to read around it, okay? I think there are about 10 of them, 10 of them. And when we say adjustment, what it simply means is that there are mistakes or errors we have to correct in the final account. Sometimes it so happens that the sales figure you picked in your trial balance to prepare your trading account, maybe there was an undercast or overcast. So you have to adjust it in the final account, okay? Maybe they paid some of the rent during the year, but it was not captured. If your attention is drawn, you have to do that correction on your final account. So that is the adjustment that we have to make. Okay. So professors, I don't want to, add on more to confuse you. So now we are very comfortable with the trading, profit and loss account and the balance sheet. Please, if you are still not clear about anything, I am begging you, watch the videos, reach out to me before we add on the adjustment. Otherwise, you will feel like you are seeing stars, as people say. Reach out to me if still you watch the video and you are not getting it. So thank you very much, professors. I think I have some 15 minutes extra to do, but maybe I'll give that to you to reorganize yourselves and read on the adjustment to final account, and also maybe try one question where you do the trading, profit and loss account and the balance sheet for me. And I hope that all of you can balance your sheets without errors. Thank you, professors. At this point, I think we'll call it a morning. Enjoy the rest of your day. Stay safe and be very good students, sons and daughters. Bye.
Bye.
So only one person said bye-bye.
Bye-bye.